Digital Core REIT IPO closes this Thursday. Yes, in 2 days' time, on the 2nd of December. So, is it core to your REITs portfolio? Well, in today's video, we are going to find out on this. All right, so stay with us to the end because what? Right, last week, our predictions on Daiwa House has turned out to be on the house. Second, you get a very detailed analysis on Digital Core REIT IPO. And three, our Christmas present to everybody from GCP Global. So without further ado, let's begin. Now, first and foremost, last week we mentioned about our video on Daiwa House Logistics Trust. What we tell you? Well, you know, it's not a very hard IPO. Maybe you can get a better price and see what the Straits Times and the Business Times pronounce on the first day of listing. Yes, that's right, ladies and gentlemen. They had a flat listing. Now, for more of that, please look at our video in detail. All right. And also, last week marked the process that one of our 5 biggest winners in REITs, which we have highlighted in our GCP Global various investment classes in March last year, Parkway REIT hit a new high. It crossed $5 for the very first time. Yes. Ladies and gentlemen, GCP Global students have reaped a fortune of close to 30%, meaning that if you bought 1 million shares of Parkway Live REIT in March last year, you are actually up by almost 1.7 million in terms of profits. Yes, ladies and gentlemen, we talk in millions because most of our student investors are actually the hedge funds, actually the family offices and very high net worth individuals. So for this week, before we come to this week's analysis of Digital Core, now I just want to share with you, ladies and gentlemen, this upcoming program that we have. Yes, ladies and gentlemen, this is our Christmas special happening on the 18th of December. What's going to happen, ladies and gentlemen, for you to qualify, you know, for a free ticket or an opportunity to win a free ticket? All you need to do is very simple. 1, subscribe to our YouTube channel, this particular one. 2, introduce a friend to also subscribe to the channel. And 3, then send us an email to gcpglobalsg@gmail.com telling us 1, your name, your email, and your contact number so that we can get into contact with you when we do the draw, you know, to pick the lucky winners for the 18th December event. What is the 18th December event? We have in-house the specialty that's actually the ESR CEO, Mr. Adrian Chew, who will share with you the dynamics of Singapore S-REITs merger, valuations, and essentially to help you make a better informed decision on basically how to value REITs in the future. So let's get on to today's Digital Core REIT IPO. In today's video, we are going to answer whether Digital Core REIT IPO, 1, should you subscribe? I think the answer is yes. But 2, more importantly, is it going to be and should be a core holding of your portfolio? As to whether it qualifies for a core holding in the portfolio, do read some of the attributes that I have mentioned in my book, Making Your Millions in REITs, which will guide you closely as to how some of the REITs actually fit into a core holding or not. For example, we shared how Parkway Live became a core holding in GCP Global Student Investors Seminar, why we over the years have told our investors that it should be part of core holding, and you can see the money that they have made when it crossed $5, a new high last week. So in today's Digital Core REIT, is that all REITs will give you the best feature. So let's look at the good, the bad, as well as the not so pretty picture on this particular REIT IPO. First and foremost, the good. The Digital Core REIT actually will indirectly own, you know, some of the best data center assets that's coming from the parent, that's Digital Realty listed in the US. All right, so essentially in this portfolio, you're going to have 10 data center properties. And as you know, ladies and gentlemen, we do like data center sector as a whole, and I think it will continue to grow because of 5G as well as digitalization, IoT, so on and so forth. Okay, so what do they have is 4 properties in the Silicon Valley, two in Los Angeles, one in Toronto, and three in North Virginia, which is one of the three biggest markets for data center in the US. What is also interesting is the fact, and what I like is the fact that the sponsor have given a commitment that they will co-invest with Digital Core REIT, in future REIT redevelopments or REIT developments. They will invest up to 10%. Very rare. This is actually one of a kind in REITs markets that Digital Core is operating in. They are actually benefiting from social media increase in cloud spending. That means the shift, the positioning some of the social media giants like Facebook's, into 5G. You can see that essentially that market will grow like 26%. Now, the second market that they do is co-location. Co-location refers to essentially, a particular data center actually servicing a couple of clients that's co-locate the services, and that is actually will be expected to grow by 22%. And then the biggest sector that actually are in is the hyperscalers. Hyperscalers are your big players like your Google, Azure by Microsoft, as well as AWS. You can see that the growth of the IP traffic is going to be a very strong 25%. And in all this, Digital Core REIT will benefit from it. Okay, now let's look at the other side of it, the bad, Now the bad part is this, ladies and gentlemen, if you look deep into this, that is the core of a REIT, right? In our book called Making Your Millions in REITs, we concentrate a lot on the quality of a REIT's assets. Now, we have always thought that a REIT is as good as the quality of its assets that it owns. So what about Digital Core, ladies and gentlemen, that if we use 4% as a benchmark, 1, 2, 3, 4, 5, 6, 7. Well, this one is about just above 4%, so I've classified that. So 7 out of the 10 assets are trading below 4%. So what does it mean? It means that the NAV for this REIT has very limited room to climb, unless, of course, with future acquisitions. So as we said, ladies and gentlemen, in the prospectus, the company has said that they will co-invest, that sponsor in this case, with the REIT. But essentially, where does the sponsor actually draw the line between REITs that will go into digital realty, that is listed in the US, the parent, versus Digital Core that was going to be listed in Singapore? In fact, there was a Business Times interview done by the CEO. He says that the more mature assets where stabilized earnings will be injected in the Digital Core. But then this may arise and give rise to valuation problem in the future. This is actually a very thin line, ladies and gentlemen. So for those of you who are thinking of having this REIT as a core portfolio, this is a key point to be addressing. Okay. The other key point that you want to be addressing, ladies and gentlemen, is the next one. Okay, and this is the fact that they have mentioned that the ROFR, it was 5 billion the previous slide, but they did say that Digital Core has a possibility of expanding up to 15 billion, which means that it's going to be 5 times the largest data center that is actually in the S-REIT portfolio right now. So be it actually MIT or Capital DC, it's like almost 5 times more. So does it mean that this REIT, as I've warned earlier, will go on a rampant acquisition after the IPO? Now, it's fine if it's actually 1 or 2 assets because the current gearing is low, that's at 27%. But what does it mean? If this is a REIT that is geared for continual aggressive acquisitions, like what Manulife REIT has shown, then the share price may take a hit in the long run. So as an astute REIT investor, these are some of the issues you may want to think in the long term, even though in the short term, it does look that the reception of this REIT among fund managers is going to be strong, right? So where does this REIT stand in terms of speediness or ugliness compared to the other 3 data center REITs or 3 other REITs that have data center in its portfolio, right? So compared to Capital DC, Maple 3, Industrial Trust, Sanders REIT, compared the share price last Friday to the beginning of this year or the end of last year, you notice that the year-to-date return so far for data center REITs as encapsulated by data Capital DC, REIT, and MIT has not been that fantastic. As we have warned in our classes to GCP Global students, that's because Capital DC and MIT have been tremendous performers in the last 2 years. In the last 2 years, both of the stocks have actually close to double in terms of value. So it's not surprising that this year, the share price took a breather. So in terms of dividend yield, ladies and gentlemen, based on the 12-month DPU, DDM, TTM, you'll notice that essentially at 4.75% for digital core, it's actually sandwiched below the 5.15% yield by dividend Ascendas in REIT, but even below MIT, but slightly higher than Capital DC. So once again, if you can see the dividend yield for 2022 as compared to the other competitors, it's somewhere there, nothing exciting about that. All right, so so as what we have said, ladies and gentlemen, the key enable to finding a good REIT, like Parkway Life, which hit our record $5 last week, as what we have enumerated in our various classes, it's one of the top 5 core REITs in your portfolio. Now, to know whether the digital core IPO should be a core holding for the long term, do follow our classes as well as our channel, because we'll continue to analyze and follow this for you, because the actions of what the managers do versus what they say on paper will be shown out after the IPO. So this is clearly what we at GCP Global will analyze and watch for you on a quarterly to quarterly basis when we hold our REITs classes. So once again, hope you enjoyed today's video, and next week we're going to have another exciting one. So subscribe and love our channel and share with us, and do email us at GCP Global SG once you have signed up, and get one of your friends to sign up so that you can qualify for our 18 December Merry Christmas event. Okay, see you later.